At this point, virtually everyone understands that they are more likely to get higher returns out of investment in the stock market than they are saving cash in the banks. Now, personally, I like having cash saved in the bank because, for one thing, it's guaranteed. You never have to worry about waking up and it not being there. You never have to worry about your money in the bank, like, just, not existing. Like, you don't have to worry about the massive volatility in cryptocurrency. You don't have to worry about sudden stock drops. So the money in the bank is guaranteed, but the problem is the interest is so low that it doesn't matter how much money you've got in the bank, you're earning relatively low interest. You can have easily over $250,000 in the bank and still be getting less than 6 or 7% interest. So when it comes to investing, basically what I do is I try to diversify my portfolio. Like, when it comes to marijuana, I got really lucky betting in marijuana because what I've been doing is very simple, really. All I do is I take a couple $100 and I buy the stocks when they are at their cheapest. And typically that means basically buying penny stock. And the reason why is because you can buy large amounts of it when it's in the pennies. And as things change, as laws are changed, as more and more states add legalized marijuana, recreational marijuana, medicinal marijuana, and it's coming. I mean, I got in, 3 or 4 years ago, and I've just seen nothing but gains out of this stuff because the problem is I bought it at its low. So basically there was nowhere to go but up. You can look at these prices, you can spend less than $100 and easily buy 1,000 shares. Now, there are some companies where you get even luckier where each share is actually less than a penny. Then whenever I see a share that's less than a penny, I actually push those numbers up. So what I'll do is if the share is less than a penny, I'll go 10,000 shares rather than just 1,000. But it's so cheap that you think about it, you only spend maybe about $100, you get 10,000 shares. And if it starts rising, like my blows off, like my can, my vape, et cetera, ERBB, FOT, these things have been doing nothing but going up because over time, America is legalizing marijuana in more and more places, especially when it comes to the elderly and cancer patients, smoking in order to alleviate, sickness and whatnot, and vomiting and whatnot. These things they're only going up. Now, I don't like buying in if the stock costs more than like $1 or $2. I like trying to get as much as possible while it's still under $1. So here's just a couple of stocks that I invested in because I keep getting all these emails. I keep getting all these people who keep sending, they're like, oh, could you mentor me? Could you tell me what to invest in? Blah, blah, blah. So my thing is, if you have extra money coming in, like let's say you have extra money and you don't want to risk a lot of money, because I don't want people to risk their shirts, because, there's a lot of people who bought into cryptocurrency. There's people who've mortgaged off their houses at $4,000 and $5,000 Bitcoin. There are people who have really like bet long on these things. And simple fact is, for those people, specifically like people who bought in with mortgages at 5,000 Bitcoin, yeah, those people have won. If they were to sell out right now, they've already doubled their money, so they'd probably be able to pay off their house. Thing about it is, I don't bet like that. I don't like bet my shirt. Basically, it's like this. When I get my money from YouTube every month on the 22nd or the 23rd, I take half of my money from YouTube, which is usually about $1,000 because I usually get a little over $2,000. I usually take half of that and I usually pump that into stocks. Now, the only issue is dividing it so that I can say, okay, yeah, I'm going to put a little bit here, I'm going to put a little bit here, put a little bit here. So typically what I used to do is I used to buy automotive companies, and then when I realized that the automotive returns were relatively low, the only one that I actually really got crazy on was Tesla, because I bought into Tesla at $30 a share, and I'd spent like over $5,000 buying their shares back in like 2012. So at this point, we had gone up to like $380 and now it dropped back to like 300 or something. It's like, I think it's around like 313, but I'm pretty sure it's going to get a little bit better because they have the Model 3 coming and then they've got the trucks coming. So right now I did so well on Tesla, but I would say the only other one I did well on was Ford, because I got into Ford during the bailout era back when Bush was president, and Ford was like less than $2 a share. Now it's like 15. So my thing is, I got one bottom line. My bottom line, all stocks, the bottom line is buy low, sell high. And that's how it works. Now, the problem is you have no idea what the high is going to be, but you always know that the low is like, you know, if you're in the dollar range, like if you're like $1, $2 or something, you know that's a low. Or if you're under $1, you know that's a low. But I don't bet my shirt. I don't bet above my head. I don't use credit cards to buy. You know, you never ever want to have to worry about margin calls. You don't want to have to worry about falling under and, you know, having to owe. So my thing is you got to make sure that whenever you bet, that you bet sensibly. And another thing I'll say is that if you have credit card debt, you need to make sure you pay that off, because the problem is the long-term interest on credit card debt, student loan debt, the long-term interest on those debts will eat away at your savings. And you don't want to have to surrender the gains and the profits that you've made betting in the stock market. You don't want to have to surrender that to your long-term credit card interest debt.